All right, yes. Like Ryan said, over the last week, we've really seen the cannabis industry stocks just pop in price. So we'll use as a proxy for the industry Advisor Shares Pure US Cannabis ETF, or MSOS, trading on the New York Stock Exchange. At the close on August 29th, so a week ago from this recording, the ETF was trading about 485 and is now trading intraday at 785, a 62% increase within a week. Mind you, that result still only results in a 14% increase year to date after that massive increase in the past week. So, why has the industry just suddenly become so revitalized? The answer is simple. Expectations have changed due to the senior U.S. Department of Health and Human Services calling on the DEA to ease restrictions on marijuana from Schedule 1 to Schedule 3, Schedule 1 being the highest designation for the most dangerous of substances. However, the DEA has final authority for any changes to scheduling, and the change is merely an increase in potential at this point. A change in scheduling would likely allow for easier avenues for research, easier access to banking, and less taxation. As well, this does not mean marijuana will be in the same state in the US as it is in Canada. It would still be federally illegal. That would require being descheduled completely, and that's not what we're seeing at this time. But many are seeing this as a step towards that in whatever 5-10 years, whatever timeline you want to give it. So how would this impact equity investors? We would see less taxation as companies are not allowed to use credits and deductions on income from Schedule 1 and 2 drugs at this time. A clear economic benefit, expected savings of in the hundreds of millions for many multi-state operators. On the operational side, we'd see access to better banking, which would likely result in lower expenses. As right now, only certain banks allow cannabis players to bank with them, so it increases costs due to that. However, the rescheduling still falls well short of the recreational demand increase like we saw in Canada years ago. In reality, it just reduces the toxicity of the current operating environment for the industry, but that does not alone make an industry. So looking deeper at the MSOS ETF, first off, you may notice that they primarily hold equity swaps, not just common shares. This is due to federal and custodial banking restrictions limiting direct investing in the equity. As the ETF invests in swaps, it has a large amount of cash as collateral. So if you're looking at the holdings, why do they have this huge cash balance? It's because they have to hold that cash as collateral. They don't really have that cash position. If they were just to buy the equity or the common shares, you wouldn't see that cash position, and they're just using these swaps because they cannot directly invest in common shares. The ETF currently holds 25 companies at this time, with its top 5 holdings being Green Thumb Industries, Curaleaf, Trulieve Cannabis, Verano, and Terra Ascend, representing 77% of the total assets held by this ETF. That's likely to shift over the next week, as obviously we've seen extreme volatility. But those are the 5 biggest holdings, representing the mass majority of the ETF, and that's unlikely to change as a whole. Looking historically, Green Thumb Industry is the only company that is currently profitable, with Trulieve previously having a string of profitability. And those out of the top 5 holdings, those are the only ones who have had profitability historically. As a whole, the industry is really still just in a speculative phase, having the valuations bank on the expectations of future earnings, but that does not mean they will become profitable or have positive cash flows in the future. We can really use Canada as a proxy for full recreational legalization in the US. I will remind the listeners that the potential rescheduling is still far off recreational usage like we've seen in Canada. Cannabis is ultimately a commodity. It is a crop with minimal differentiation from its core products. We are now seeing Canada edibles and drinks and stuff like that adding a bit more differentiation, but the plant as a whole is a commodity. So what results is you see a race to the bottom in pricing as producers produce as much of supply as they possibly can, causing razor-thin margins or even negative gross margins for many of the players in Canada, where you aren't even seeing those harsh taxations like you are in the US currently, where you can't deduct. And still, in the US and in Canada as well, the sale taxes are high. Where it is legal in the US, You see an additional sales tax between 6% up to 37% in Washington, with the majority ranging between 10 and 20% being the sweet spot for most states. Also, there is potential if we do see federal legalization that you see more taxes on the federal level, whether that's wholesales or a sales tax of some kind. So, as a whole, the industry is still regulatory high risk in the US, and it will continue to be. It's just slightly, ever so slightly less at this time, but that does not warrant really a 60% increase in valuation, in my opinion. The industry will, in the future, be commoditized and will be subject to high taxes, likely. You might see a couple of states see lower taxation, like I forget which one it was, but at 6%, that's not too bad compared to your 37% in Washington. But the fact is, it's going to likely have high taxes and high commoditization. Those are both very negative aspects for equity investors. Remember, you're not investing in the industry as a whole. The big winner here is the government because they're seeing those tax revenues. You're an equity investor, not an industry investor. So any tangible and as well any tangible market demand is still years out because you're not going to see a big demand shift with this rescheduling. We're once again seeing just the same headline-driven share price appreciation, which once the interest fades, whether it's a month or a year from now before anything else comes, you're just going to see the current players just slowly burn through their cash for the most part. You'll see their stock just slowly drift away, and they'll dilute their shares to raise their new capital. You might see an outlier or two in the future, not at this time, who do become sustainably profitable. But we're not really seeing that at this time. The best bet at this time would be Green Thumb, but we saw before with Trulieve, they were profitable for, I think, about 5 years, and now they're not in the profit anymore. And you may see some investors say, well, I'm going to hedge my bets. I'll buy MSOS to say, hey, I'm going to bet on a bunch of them, and maybe one winner will pop out, but then you're also buying a ton of losers at the same time. So eliminating any of the potential gains from that winner or just going to loser itself. And just to end it off, the industry is really just still far off from being a buy and hold investable criteria, hitting that criteria. Really anything past being an event-based trader, it's just not really worth touching at this time.
Yeah, I think it's a good summary. It was a recommendation. It still has to go through many hoops before it actually gets to be put into anything that would be meaningful for the sector. Now, again, it's not still full legalization either. So, and on top of all of these things, you went over the scenario in the Canadian market with, cannabis being a commodity, margins shrinking over time. It's just, perhaps, like you said, there could be some winners. It's very difficult to pick them right now. And I think part of the big jump that you saw and have seen over the past few days since this was released was there's such a negative sentiment. There were short positions on many of these companies. It would be short covering probably just, they're covering their butts at some point. They're probably significant profits. And then that's why you're seeing such an extreme move in the share price in such a short time. That's what I would speculate on what has caused that really extreme move. So can it sustain itself? Ultimately, the companies have to show better growth, better profitability. Probably some of the competitors have to exit the segment, and then you can have some sustainable players. Now, that's probably going to play out over a 3, 5, 10-year period. So this may be a footnote. I mean, it's a positive note right now for the sector, which has had nothing but negative for quite a significant amount of time.
And they've been talking about, changing the schedule forever. I mean, cannabis is up there with heroin, LSD, ecstasy, like basically what the Schedule 1 drug says basically too is that it's highly addictive and it has no acceptable medical use. So, I mean, it was only a matter of time that it changed. And then as well, just, to touch again on the commodity, like Ryan was telling me that back in 2014, when he would go to his local dispensary, he was paying about, $200 for an ounce. And now he can buy an ounce for about $100. So, I mean, that's just to show the commodity right there. Right. You were telling me
weird that Brennan knows those off the top of his head, right? Like I couldn't quote you any of those, but it's weird that he knows those off the top of his head. We didn't even tell him we were doing this segment. So.
No.
Anyways. No, but
It's a good sign that maybe the government's moving in a
Yeah.
positive direction, but nothing more. Nothing to get too excited about.
yeah, and the as far as like Schedule 1 to Schedule 3, the recommendation, the Department of Health and Human Services recommendations, they are binding on scientific and medical matters. So, like Brennan said, it would suggest that it's likely going to move for sure out of Schedule 1 with the heroines of the world, which most people can agree it's not in that category. So that likely happens. But it's probably going through the timeline into the presidential elections. This is highly politicized. Like the it's not legalization, but even moving from Schedule 1 to Schedule 3. So they'll want to be talking about it around those times. So I mean, that's not until like into 2024. So still a ways out before there's any absolute conclusion. And the larger players that would really take to move the sector long term probably are waiting until they have that green light. And it's not even a full green light. That's what we're kind of trying to get to.